You see the stock market going up, and then you see it coming down. You want to push that red button to sell, sell, sell. Don't do it, please. Don't do it. Listen to this video before you do something that dire. I'm going to talk about it coming up. Hello everyone, welcome to my channel. My name is Orlando, and we're gonna talk about what should you do if you see the stock market taking a big dive, right? Especially what's been going on with the whole COVID situation, and you've probably seen stocks just skyrocket, and then now you're seeing them start to come down, and you start to see, news, sound bites of, it's gonna crash, the market's gonna crash, this, that, blah, blah, blah. You're just hearing all of this chatter about, oh man, I'm gonna lose my money. That's what you hear. I'm gonna lose my money. I'm here to kind of go through some steps that I want you to go through to remember what your goal is and the steps to take when you see the stock market going down like that. So number one would be diversification, right? Diversification is really key when you decided to pick out all of your stocks, when you decided to do your 401k, when you decided to do anything when it came to stocks. You diversified. You decided that I'm going to put money in this, this, and this, and this. And the reason why you did that was because if one fails, the other one should do better. Or if two fail, the other should do better, and so on and so forth. So that was the reason why you diversify. And I need you to trust in that process. That process is there for a reason, and you have to trust it. You didn't put all of your eggs in one basket with like a Tesla or a Google or Apple only or Netflix or something like that. You diversified. And it's really evident as far as if you do like a 401k or anything like that, where it's basically like a set it and forget it type of scenario, where you basically just put the money into a basket and then you just forget it, and it has a date of when you're going to pull it out, which is retirement. Those normally have a lot of diversification in it as far as bonds and things of that nature kind of wrapped up all in it, 70 to 30, depending on whatever your risk factor is. If you're closer to your retirement age, then obviously it wouldn't be so risky. But if you're a younger person, then it's probably more risky on the stock than it is on the bonds. And there's just a bunch of mixtures that can go on depending on who you're brokering with and how your plan is set up. So you have to really trust that as far as diversification goes. It's already kind of mixed up in it in a 401k, but let's just say you're an individual who just bought individual stocks. I would hope that you diversified. You want to make sure that you have multiple stocks and not just all of your eggs in one basket. But then some people are going to say, Orlando, what if I didn't diversify? And I'd be like, do you watch my videos? It's really important that you diversify. But no, on a serious note, if you didn't diversify, that is another big reason why you should hold on to the stock and not sell, because you're in the hole and you're trying to dig yourself out of it because you didn't really diversify, and the hit that normally would have been spread across through the stocks, right? You took on a very narrow view and you got hit right at the right time, particularly on that stock. And there's nothing to really kind of spread out the risk. You've kind of risked it all, and when you risk it all, you could lose it all, right? And that's what you did when it came to stocks. So you have to make sure that if that's what you did, then you have to kind of sit in it and kind of just wait it out. And maybe when things get better, when the stock is able to come back to a normal price, then maybe you want to take some of that out and spread that across, or maybe you want to buy additional stuff to kind of offset that. If something happens to that stock, then you have the other stuff to kind of diversify, which is the main point of this segment right here, is diversification. So let's go on to number two. Remember when you were doing this, when you signed up for your 401k and you went through your brokerage and you signed up to buy stocks and sell stocks, and it made you do like this risk profile. Remember that? See, this is the reason why it asks you those questions, and It's not something that a lot of people take serious, and most people skip it. They just go, whatever, I don't care about this. Who cares about my risk profile? And this is very important. The reason why I ask you these certain questions about what is your tolerance for risk? Because in this scenario, when the market is crashing, your real risk tendencies come out. What can you take when it comes to risk? If the market starts going down just a little bit, are you like sweating bullets and saying, oh no, I need to sell right now? When it hits the bottom, are you gonna say, nope, I can't take anymore, hit the eject button? That's the reason why that is important. And you have to really remember what your risk tolerance is. You have to understand that at the end of the day, what was the purpose of you investing this money into your stock to begin with? Was it retirement? Was it just regular investing? You wanted to try to get dividends? And whatever the reason was, it aligns with the risk. And you have to take that into consideration. And you have to really remember that when you're investing into stocks, it's more of the more riskier investments. You're basically gambling, right? I mean, I know a lot of people don't like to hear that when it comes to stocks. They think, oh no, gambling and stocks, that's two different things, right? But in reality, that's what it is. You're gambling, you're putting your money up and you're hoping that the stock will go up in value. And you have to come to grips with that. I am involved in a financial instrument that is inherently risky. When you look at it that way, you think to yourself, you know what? I am doing something that's risky, and at the end of the day, maybe, just maybe, I could ride this out because, you know, I invested in something that was risky and I didn't win, and it wasn't a guarantee to begin with, so I'm just gonna go ahead and ride this out. I'm gonna ride this out until we kind of see what happens on the other end. Probably think to yourself, maybe I shouldn't make an emotional decision based off of my inability to take in the type of risk that is involved when it comes to stocks. That is very, very important for a lot of people to understand when the stocks are going down. A lot of people make an emotional decision to go ahead and push the sell button because the type of risk that they thought that they could take, they really can't take. So I really need you to take a look at your risk profile. What can you really take? Maybe go online, type into Google, type in a risk profile, and kind of understand exactly what is your real risk that you are willing to take when it comes to stocks, right? But I would highly, highly, highly suggest that you do not sell your stock when it's falling in this atmosphere because of a mistake that you made when it came to evaluating your risk. Now, third is knowing what you have actually bought. There is so many times I can tell you guys is that I speak to individuals and clients and they have no idea why they bought a certain stock or what they actually have in their portfolio. And the reason why this is because a lot of times individuals buy because of trends. They buy because they see the upside to things and they have no clue what the company does, what products they sell. All they know is that they're worth $50 per stock and they probably can go up to 200. That's all they see. And you see this happening all the time, especially with the Tesla stock. There are just some people who have no idea what Tesla does and exactly what their whole product layout is. They are literally just buying the stock because they just want to take advantage of the upside. They don't want the FOMO, right? You have to really, really understand the reasons why you have decided to invest in these companies. Did you invest into Netflix because you know exactly what Netflix does? Do you follow to make sure that Netflix is still doing what they are supposed to be doing as far as a company and growing? Are you making sure that you're keeping an eye on competitors and things of that nature? Why are you really involved with these stocks? This is especially true if you're an individual who buys individual stocks for your portfolio. You have to make sure that you follow these companies and do your research. You cannot just decide to kind of like buy it and forget it. Let me just say this really quickly. When it comes to the buy it and forget it strategy, you have to have a risk tolerance of you're okay with losing all of your money. If you're just gonna, cover your eyes and in 30 years go, wow, okay, let's see what it made. You have to be ready to lose that money. And an individual like that is normally not going to even care about what's going on in the market. If it's going up, if it's going down, they won't care, because all they care about is what at 30 years, what will the dollar amount be in 30 years? But what tends to happen is you have some individuals who will look at their 401ks and they think they're set it and forget it people, but they're not. They're set it and look at it and then analyze it and then sell and all that other stuff, right? They're not set it and forget it individuals. If you're gonna be that type of person, you're gonna have that type of profile when it comes to investing in stocks. I need you to know exactly what you're investing in. I need you to know what those companies do. It is just so important to know your stuff, especially if you're going to be a type of person who's going to sell when the market dips. And the market dips and you're going to sell, then you need to know exactly what you are buying. You need to know exactly what these companies are doing. So those are my tips for as far as if the market is falling, what are the things you should be looking at to reflect, to decide if, should I sell or should I not sell? But here's the end result of this, guys. You shouldn't sell. You shouldn't sell. One of some bonus things I'm going to add in here really quickly is I think it's always great to get some type of reflection from someone outside. You talk to someone, get a second opinion, speak to someone else. If you really want to sell during the dip, get someone else's perspective. Hey man, should I sell this, this and this and this, blah, 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 blah. Speak to someone who can give you some type of perspective. I'm not just saying go speak to anybody. I'm saying speak to someone who you feel is knowledgeable in the financial field and ask them, like, what should I do in this scenario? Should I just go ahead and sell my whole portfolio, or should I keep it or whatnot? Get a second opinion before you push that big red sell button, please. And then secondly, too, what a lot of people don't understand is there is an actual buying opportunity in the dip. When the market crashes, this is a great time for you to buy more. Why? Because you're buying things at an extreme discount because it crashed. And we've seen this happen over and over and over again, where a recession comes and then next thing you know, the stocks are worth 3 times more than they were 10 years later. And it's not going to change with this crash. It's not going to change with the next crash. It always happens in these cycles. So it's a great buying opportunity if you have the money. But once again, that is another risk factor. If you are really distraught about what's happening with your current stocks, are you really going to buy more stocks when you're already kind of like heartbroken and crushed over the fact that stocks are where they are right now? Probably not. But I do want to just put that out there that you can buy the dip, and that is a great buying opportunity. If you got value out of this content, please hit that subscribe button, notification button, and like button. It really helps out my channel, and I'll see you guys on the next one. Thanks.